How easy was it to buy your first home?
It's very hard. You need to save. You need to be in the attitude to save. You need to really sort of give things up, and I'm not prepared to do that at the moment. So yeah, renting is where I am at the moment.
I got some help from my parents for the deposit. I don't think we could have managed without it.
I've been in the house for 20 years, so we've not got a lot to pay off the mortgage and that. You know, we're not under as much pressure as some other people are with the price of them these days.
The first mortgage I got was exactly 50% off my income, so it was very difficult.
It's a lot at the beginning when you're first married and then you've got a mortgage to pay, it's quite high, but once you get there it's your own house, so it's something to achieve, so it's great.
And what about you? Did you struggle to get on the property ladder? We certainly had to save for a long time to get our first place. I'm Kim McAllister. This is Clever About Cash.
I really like the kitchen because I feel like it is separate, but it's not...
It's got that funny step up like it did in the bedroom.
Yeah, it feels like it's a different room, but it's still there.
And it then means I've got this whole space for when I want to cook and things, and it's good when I've got friends over because they can all sort of sit there and I can still be chatting and cooking and making cups of tea and things, which is good.
Well, we're spending today at the foot of the property ladder with Stuart and Connor, a couple who are trying to get on the first rung, and Lisa, who's recently managed to buy her first place here in Cathcart. So, Lisa, how long did you spend saving for your deposit?
I've always been quite good at putting a little bit of money away every time I got paid, whether it was from a kind of bar job, restaurant job. But it was probably about 5 years that I was focused on saving for a deposit for the flat and started really, you know, trying not to dip into the savings for holidays and things.
And how did you approach it? Were you quite set on the amount that you put away, or did you have a little bit of flexibility?
When I opened a Help to Buy ISA, you can put £200 away a month, and that's the maximum, which was usually what I tried to do. Sometimes it was a little bit less around Christmas time or summer. If I was going on holiday, I'd maybe just put in 100 or 150, but I think the kind of target was that same amount every month because I knew that that would then pay off in the end when I actually came to buy the flat. I came to see this flat, it was the first one I saw, and I think it was about 5 weeks from viewing it that I got the keys.
Oh my gosh.
So yeah, it was just kind of happened that way, and I was like, oh right, well, I've bought a flat now.
So it was easier in the end than you anticipated?
Yeah, I think so, because a lot of people have this really long time spent looking at flats and having offers declined, and I was set up for all of that and I was ready, and then it just sort of happened the way that it did, and it was very overwhelming. I think I kind of thought I would get in and it would just be a big party, but I remember sitting kind of no furniture like, what have I done? But obviously I'm delighted now and really happy and settled here. But
and it is a beautiful flat, and you've done so well to get it.
Thanks.
And Stuart and Connor, you're saving at the moment. How are you finding that process?
We actually started saving initially back in 2016, and then we decided, like all responsible adults, to blow it, and we went to New Zealand for much of 2017. So we spent all our money and came back with pretty much nothing, really.
Yeah, it was pretty much a case of starting again at that point.
Yeah.
But I think we went for a mortgage consultation about a year and a half ago now, and we were recommended to open our cash saving ISAs, or Help to Buy ISAs. We set up standing orders for it, so it just goes every month. It's money that's accounted for at the start of the month now. And then anything that's left at the end of the month, we then try and put into savings. Some months obviously that's not possible, like holiday months or Christmas months. But yeah, most months it's getting something away.
And do you find it's easier to save because there's two of you and you're kind of keeping each other accountable?
I think so, yeah. I mean, to be honest, in all honesty, I don't actually know how to get money out of my Help to Buy ISA just now.
So it's not an issue.
It just goes as a standing order, and I assume that if I just wandered into the Building Society and asked them, they might be able to give me it back, but I don't want that. So I never even think about that. The rest of it,
Yeah, I think it's just the extra money. We're like, oh, we need to put this away this month, and then one of us has something on that we've got to be like, okay, let's just take it out of savings then, and we'll take the hit later down the line, sort of thing.
What is it that motivates you to buy your own house rather than continue to rent?
The price of rent was one of the biggest things at first, but then as well, just we kind of want to have a dog and things like that, and maybe a garden of our own.
Yeah, having the freedom, I think, of having your own... where we are just now is it's a lovely flat, it's a rented flat, but it's just a magnolia walls and cream carpets and things. It'd be so nice to be able to do something like what Lisa's done, having a pink wall. And having a bit of decoration, having something that's a bit creative, and being able to put your own stamp on a property. But also, yes, having a dog and having a garden and having all those things that we've not had for years living in flats in Glasgow.
And you mentioned you'd done some research into mortgages. Do you know what kind of mortgage you're going to go for?
Not fully, but it would be not like an interest-only one and fixed rather than variable interest.
Yeah.
Maybe Lisa will be able to give us some information about mortgages.
You've actually got much better knowledge than I do.
With so many types of mortgages, it's no wonder we get confused. Here's financial coach Eileen Adamson to keep us right.
Now, the biggest purchase most people are likely to make in their lifetime is a house. And it's important to do this in the most economical way possible. There's various types of mortgage and lots of different lenders, which can make it all seem really confusing to begin with. However, learning as much as you can about mortgages will be really useful to you throughout your life and has the potential to save you a huge amount of money. Just this morning I researched the cheapest and most expensive deals over a year for a £120,000 mortgage. The cheapest would see you paying $6,330 in the first year and the most expensive $11,830. Now that's a difference of $5,500 a year. If you paid the most expensive option over 25 years, it would be £137,000 more expensive. So that's why it's vital to understand mortgages and to work out where you can get the best deals. A mortgage is simply a loan and you're charged interest on the capital, which is the money you've borrowed. Mortgage rates, which is the percentage of interest you will pay, are best compared by looking at the percentage of the initial rate in the deal and also the standard variable rate after the deal ends. The rates offered vary according to the lender you choose, the term of the deal, the amount you wish to borrow, and the amount of deposit you have, amongst other things. Fixed and cap rates will remain the same over the whole period of the deal. Variable and tracker rates vary with the base rate, which is the rate of interest set by the Bank of England. Fixed and cap rate mortgages are often offered at slightly higher rates, but you have the security of knowing exactly how much your payment will be for the whole term of the deal. With variable or tracker rates, it's up to you whether you're happy to take the risk that your rate may go up or down during the time that you're paying. Throughout the term of your mortgage, you should shop around for different deals, as deals tend to only last for a few years. Now, the longer the term of your mortgage, the more you'll have to pay in interest. So when taking out a mortgage, you might want to consider taking it over the shortest term possible. Although it'll cost you more per month, it will often save you a substantial amount of money in the long run. Join me later in the programme to find out how you can ensure that you are getting the best deal on your mortgage.
Eileen will also be seeing if she can get Stuart and Connor just that little bit closer to owning their own place. Lisa, we're in the city here. It might have been easier for you to buy something further out. Is that something you considered?
Had I considered somewhere a bit further out, I'd have to have spent a bit of time thinking about commuting because I work in the city centre. Even just things like taxis home from town if I've been out or got a car, so that extra bit of driving and petrol and things like that.
Mm-hmm. And for you, Stuart and Connor, are you set on the area or what type of property is it that you're looking for?
When we first started saving, we sort of did a red line sort of thing of what do we each of us want. I said that because I was working from home, I really wanted to have a second bedroom or at least somewhere that was separate to the rest of the house for me to work. And I said also, because we're so keen to get a dog, I'd really want us to have a garden.
In the last flat we were unfurnished, so we've accumulated quite a lot of furniture, and it's just try to look through to think, what would actually fit in there, or what could take all of the furniture that you have. That was kind of how we approached it, and that was when. So that means that when we're looking on all the different apps and things, we just sort of search for the things that we know we desperately want, and then everything else, it's just like, that's nice. That one has a garage, or that one has a driveway, or whatever.
Well, after our homes, the next biggest purchase is often our cars. Nina Ballantyne from Citizens Advice Scotland has some things to watch out for if you're buying second hand.
The first one is to check out the seller. If it's a trader, do some research, see if they're accredited anywhere. If it's an individual seller, you find online, then what you can do is make sure that you meet them at their house so you know their address, and be sure to get a detail of the vehicle's registration number. That's pretty key because the next stage is using the registration plate. You can carry out a number of low-cost or free checks, so that's through the DVLA, through gov.uk's website, and through private history checks of vehicles using someone like the AA or RAC, and that'll give you a really good idea of whether the seller has been honest with the condition and the history of the vehicle. The last thing to think about before you start putting up any money is taking a test drive. You want to make sure you see the vehicle in daylight and that you take the vehicle out for a spin. What's really crucial is to get the original logbook and the valid MOT test document. It's important not to be afraid to haggle on the price. You can start low and let the seller work the price up. If you walked into the shop and you saw a pint of milk was suddenly being retailed for £4.50, you'd know that wasn't appropriate. But a used vehicle might be something that you only purchase every few years, and so you're at a disadvantage. So it's important to make sure that you've taken your time in making the decisions there. If you're looking for guidance on buying a used vehicle, or you want any extra information, you can head to citizensadvice.org.uk/Scotland, and there's a free toolkit there of all the checks that you can carry out and what to do if things go wrong.
Each week on Clever About Cash, we're finding out about the work that Scottish technology companies are doing to help us manage our money better. Laurel Quinn from Edinburgh-based app Sustainably has been showing me how they make it easier for us to give to charity.
With Sustainably, you can simply connect your bank card to our platform. Then every time you shop, we round up your spare change and give it to causes you care about.
So if I wanted to do this, so say I've gone clothes shopping and I've spent £45, how does that then work?
You choose which cause that you care about on the platform when you sign up, and then you can also set a limit on how much you want to give. And then every time you buy something, we round up that little bit of spare change and we give it to that chosen charity. And you can pause it or change it anytime you want. When you set up your roundups, you can say what limit you want to give up to every month. So you can set it as a tenner or 20 quid or whatever you want. And once you get to that level, we'll stop taking the roundups for that month, and then it will reset again next month. And it's retailer agnostic, so it works in every retailer that you buy from. And it's not kind of a certain thing that you have to do at the point of sale. It's all connected with your card. So you don't have to do anything.
And it works with any charity. I mean, if I was to say a really small, obscure or even brand new charity, you guys can set that up?
Yeah, so we have some charities that we are putting into their next release, but we're also enabling our users to suggest their own charities, and we'll get in touch with them and try and get them to set up on the platform. But we will be enabling the platform for charities to self-onboard, so it can really fit to any size of local or national or even a global charity. We've kind of created something that's really simple and secure, so that you can give with privacy, transparency and control. So what that means is we don't pass on your data to the charities that you support, and you can spend as normal, but every time you're buying something, you're also doing something good.
Stuart and Connor, you've been telling us how tough it is to get on the property ladder. And Lisa, although you've recently managed to buy this place, we know that the mortgage is never far from your mind. So let's see if financial coach Eileen Adamson can give us some guidance. Eileen, do you think Stuart and Connor are being realistic about buying a place by Christmas?
Stuart and Connor seem to be doing all the right things in terms of buying a property, which is really refreshing to hear. It's great that you've opened up a Help to Buy ISA. What I also love about you, Pierre, is the fact that you've actually bought furniture for your house. That is just amazing, because what that does is it really grounds you into the fact that you are having this property. And because you've bought the furniture, you can envisage yourself moving into your property. What then happens is the dream of owning your own property then becomes more important than the other things that you might want to spend your money on, going away with friends for the weekend, etc. Another thing that I like that you've done is that you have decided how much you're going to put away. The average house deposit in Scotland just now is 21,000, and it takes the average person 9 years to save up for it. So you pair are doing really well. What I think some people do is they look at the 21,000 and go, oh my goodness, there's no way I can save that. But it's about breaking it down and making it a monthly amount, so that you can then, rather than thinking about saving 21,000, you're thinking, right, if I do that over 5 years, it's 4,000 a year. That then breaks down to 350 a month, £90 a week. It suddenly becomes a bit more achievable.
Yes, I think that probably is right. I think in our head we always had the money that we put into our Help to Buy ISA is definite, and then the other money, we know how much should be going into savings. And I guess it's sometimes tempting, if we're not able to do the full amount, that we're then don't save anything. You think, oh, we've written off this month anyway, we'll move on to the next month. So maybe it would be better to go with a lower amount into our sort of joint savings. And then when we're able to increase that, that's great. But if we could hit that every month, maybe that would be better in the long term than trying to constantly do something and then everything always getting in the way and getting frustrated with the whole process because you feel like you're always taking one step forward and then suddenly getting a hit back as well.
Totally. You don't want to end up saving so much money that you can't have a life, because that then just frustrates you and then you lose sight of the prize at the end because you really just feel unhappy with your life. So it's about getting the balance right between saving enough and having a life. The £21,000 deposit, don't be scared by that. You may not need that. That's just the average. But what I would say is the higher a deposit you can put down, the better, because that then reduces your mortgage repayments, which that's the one that you're paying interest on. So over the lifetime of the mortgage, you will pay quite a lot of interest, even though the interest rate's really low. The bigger deposit, the less you will have to pay in interest over the time. You're thinking about buying an older property, is that right?
Yeah, I would like somewhere with character, I think. I mean, somewhere, again, Lisa, not to try and steal your flat, but looking about this place, it's really nice because it's sort of an older property and it's got higher ceilings and all the things that we're looking... Yeah, bay windows that give it a lot of light, and that's really ideally what we'd be looking for, something along those lines.
If you had been considering a new build, the Scottish Government offer a Help to Buy scheme in which they will contribute up to 15% of the purchase price in the form of a home equity loan, which means that you can finance the property with 80% mortgage and a 5% deposit of your own. The home equity loan then becomes repayable in 25 years or when you sell the property. Would that be something that you would consider to help you to get on the property ladder a wee bit quicker?
I think we had looked at that initially and then had that explained with a mortgage advisor when we went to a mortgage open day. But I think after discussing it more, it wasn't really what we were looking for, just going by our understanding of it, that money put in by the government at that point would have been the 15% of the property's worth. But then if you sell that in future, is it 15% of the then value at that point that they then would take back? So it's still 15%. That could be quite a lot more money in future if you were to resell that. But again, new builds aren't really the kind of properties that we're looking at, just purely from a taste perspective, that it's not really what we like at all.
When you bought this place, Lisa, were there any costs that you hadn't thought about when you moved into your own place?
I think there was more things like insurance I hadn't really considered in terms of home insurance and liability insurance as well. So I've got a factor in this building. There's a quarterly payment to the factor that covers sort of liability and the lighting and things like that. Although they aren't huge amounts individually, you know, it's £16-17, it does all mount up, and on a monthly basis. The first few months I was like, am I paying for this again?
Have you learned anything from today? Is there any sort of changes you're going to make?
I feel a lot more positive. I feel like at least we know we're sort of going down the right track.
I hadn't really considered when you were talking about factor fees, and then you've got the home insurance and you have building insurance as well as part of a flat. What fees aren't expected for moving in? It's good to sort of get that sort of insight.
Well, I'm certainly looking forward to the housewarming party and meeting this dog that you're so desperate to buy. So for those of us who already own our homes, it can be tempting to use that equity to free up some cash. Independent financial advisor Phil Anderson has been telling Richard Forbes the pros and cons.
Equity release is for people generally over the age of 60, where they can take money out of their home and use it for any purpose.
Do you have to pay it back, or can the bank take the money back when the property's sold?
There's a couple of different options. You've got one called retirement interest only, where you pay the interest each month. So if you borrow, let's say £30,000 at the start, you would still owe £30,000 at the finish, and you would pay the interest back on that each month. And then you've got what's called a roll-up interest mortgage, where, again, let's say you borrow £30,000 to start with, maybe after 10 years you may owe 55 or 60,000 at that point. Now, some of the providers adhere to there's what's called the Equity Release Council. The Equity Release Council have got a no negative equity guarantee. So with that one, you know that you're not going to owe more than the value of your home. One of the new products that's come out just recently is also what's called an income product, where instead of getting a lump sum at the beginning, you can also take it as a monthly income. So they'll pay you so much out for the rest of your life each month based on that product.
So what you're saying there is if you live to a very old age, the interest payments wouldn't mean that the company are owed more than the house is worth?
As long as the provider is a member of the Equity Release Council, they'll have the guarantee, so you would never owe more than what your house is worth. So even let's say that house prices were to drop, and with the roll-up interest mortgages in the latter years, the interest's rolling up because you're paying interest on top of the interest. So it is possible that the debt could be more than the value of the house, but if you're with a company that's got this no negative equity guarantee, then you would never owe more than what the house is worth. The interest rates on the roll-up mortgage tend to be somewhere in the region between 5 to 6%. What you normally tend to find is after about a period of about 10 years, the debt will have doubled roughly by about that time. If you borrowed 30,000 initially, it's likely to be nearer about 60,000 by that time, but again, it all actually depends on the interest rate that you're paying as well. So unlike a normal mortgage where you would make a payment each month, on the roll-up interest mortgage, the interest gets added up each month till eventually somebody usually would die or go into long-term care. At that point, the property would be sold and the mortgage debt is repaid at that point.
How does the company determine how much money you get? Do you just ask for what you want?
It's all based on your age and the value of your property. Also, if someone, for example, had ill health, they may get more money. The companies, they look at it and say, right, on average, how long is this person likely to live? And again, with the amounts that they give you, that's why it's unlikely that you would ever owe more than the value of the house, because the companies are quite cautious with how much they'll lend. They've got limits that they'll say, right, maybe someone at the age of 65 will allow them to borrow 25% of the value of their home. Someone aged 70 might get 30%. So they're looking at it and saying, right, on average, how long is this person going to live for? And they're basing the loan amounts on that.
Bank branches across Scotland continue to close as more and more of us use computers and phones to manage our transactions. But, maybe you still prefer to do your banking face to face. I've come along to Hamptons in Edinburgh to meet Graham Hartop and hear why private banks are still offering that personal touch.
Really what people are looking for is that relationship-driven approach. It's very difficult to get on the high street nowadays, where if you have a particular problem wanting to be resolved, it's very difficult to find someone who's able to do that for you. With a private bank, you have a named private banker who can help you through any problem. In the very early days, we had a number of clients who were becoming more and more frustrated, and shareholders for that matter, who were becoming frustrated with the fact that they couldn't get that level of service. And that's why they invested in what we're doing here, because they firmly believed that a personal service with a relationship-driven approach was something that they would benefit from and others would benefit from too.
My partner and I were looking to buy our first flat here in Edinburgh. And we had slightly difficult circumstances in that because I'm a freelance writer, I earn money quite sporadically. And although I'd been doing quite well and we'd saved enough for a 20% deposit on what we wanted to buy, we were still finding that a lot of the high street banks were reluctant to lend to us. Also, my partner had a 3-year contract, and although her salary was reasonable, I think they were a little bit cautious about the lack of stability. So we had an independent advisor, and he put us in touch with Hampden. We'd never heard of Hampden, and we certainly had never thought about going with a private bank, and they ended up giving us a mortgage so that we could buy our first flat. And we thought it'd be hugely expensive, and it was a little bit more expensive than the amazing rates that you see from high street banks, but it wasn't very much more.
So you felt the difference that you were paying was worth it?
Yeah, definitely. I mean, it was the fact that they were able to look at us and sort of decide that we were kind of reliable people, and that even though our financial situation fluctuated because of the nature of our professions, they felt that we were people that would be good for the money, and we'd pay back the mortgage every month.
Mark Prentice is the head of banking.
I think there's a myth that we're only for the lords and captains of industry, and that's not the case. We want all sorts here. People who've got ambition really is what we're after. So last week we were looking at a case for a 94-year-old and his 60-year-old son about how we could help them estate planning, and then the following day we had a 20-something professional rugby player in looking to buy his first house.
I'm not particularly business savvy. I don't think there are many authors who are particularly business savvy. But sometimes you find yourself with more money than you expected, which is nice, and sometimes you find yourself with less money than you expected, which is not so nice. But it was good to have that level of flexibility and to discuss options with someone who's an expert. You can just talk about your individual circumstances and they can make a decision based on all sorts of different variables, which can't really happen if you go onto an online banking, a big bank, and you put in your details and they say yes or no immediately.
Our model is to meet the client, so we have a face-to-face. That could be in here or we'll go and see them. People miss that opportunity to tell their story because everybody's story is slightly different, and if you've only got one offer through an internet channel, it's difficult to tell your story. So I can give you an example of a lady who was in an accident and she won some compensation through her lawyer, and she wanted to open a trust account so the money could go into trust and pay for her welfare for the next 10 years. Opening a trust account is so complicated these days for the mainstream banks. For us, it's day to day. So the banker went off to Tayside and saw the client with their sister and opened the account in the house.
I didn't know that was even possible. I thought it's amazing that kind of old school banking, if you like, is coming back round.
That's what we call it. We call it old-fashioned banking.
Banking in general has a kind of bad reputation after the crash. How do you feel that's affected your side of the market?
I think that plays to us because people want to be able to check out their banker as much as we want to check out them. So it's nice to eyeball the banker and make sure they understand you and you understand them and see where you're coming from.
Next time on Clever About Cash, we'll be finding out how a bit of financial planning could help us to retire earlier. But before we go, Eileen has some homework for us.
Rather than just going to your bank and asking for a mortgage, it's important to compare the whole of the market to ensure that you are getting the best deal. This applies equally to first-time buyers or to people who already have a mortgage. Both should compare to check that they are getting the best deal available to them. One of the best places to start is by doing your own online research. Typing "compare mortgage deals" into Google will bring up a huge range of comparison sites, allowing you to compare deals from all the different lenders. This will help you to get an idea of the deals available and the costs involved. You can then go on to organise your own mortgage with the lender who offers you the best deal. However, for many people this is a scary prospect, and having some support with this might make the process seem easier. People are often put off by the cost of seeking support with mortgage applications. Although paying for mortgage advice might save you money in the long run, there are also ways of getting mortgage advice completely free of charge. There are now some online brokers who offer free help with finding a mortgage suitable for your needs. You might want to check out Habito, Trussell and RateSwitch, as they offer free, independent, impartial advice and compare the whole of the market. Some mortgage brokers also offer free advice, but you should check that they compare the whole of the market and aren't restricted to offering deals from certain lenders. Unbiased.co.uk will help you to find a mortgage broker who is suitable for your needs.
I'm Kim McAllister. You've been listening